Ladies and gentlemen, please welcome the Honorable Jeffrey Zients, Director of the National Economic Council, to moderate a discussion on investment and the U.S. economic resurgence with Mr. Federico Fleury Curado, President and CEO of Embraer S.A., Mr. Thomas Donahue, President and CEO of the U.S. Chamber of Commerce, Mr. Takashi Niname, President and CEO of Suntory Holdings, and Mr. David Rubenstein, co-founder and co-CEO of the Carlyle Group.
Well, thank you, everybody. I want to thank Penny and her team for pulling together a spectacular and important event. We have over 80 countries represented here and every state and territory in the U.S. So thank you all for being here. We're really excited as the U.S. government to host you. This is a stellar panel, so I'm going to be very quick in getting to our panelists. Fred is the CEO of Embraer. We all know because we fly his planes. He's been at the company for 25 years, and Fred himself is a pilot and also a guitar player. Hopefully he doesn't do both at the same time. Tom Donahue and I go way back. Tom leads the largest in the world business federation, over 300,000 members, 3 million businesses represented. Tom and I sat on a corporate board together before I came into government, a public company. I can tell you, Tom has a gift for cutting to the chase. So Tom, I'm looking forward to that this morning. Tak took over as the CEO of Suntory last year. It's one of the largest beverage companies in the world. He's a Harvard Business School graduate, and in addition to his corporate responsibilities, he's a senior advisor to the Prime Minister of Japan. David Rubenstein is the co-founder and co-CEO of the Carlyle Group, and that is a big responsibility, as Carlyle is one of the largest private equity firms in the world with a couple hundred companies in its portfolio. But on top of all of that, believe it or not, David is actively involved, oftentimes in the leadership position, at over 36 philanthropic organizations. So I don't know how he does it, but David does it all. I'm going to dive right in, as I said, to the questions here and start with it, as Penny said, is a good time in the U.S. economy. We've had a good run of job creation and growth. At the same time, the U.S. has a strong strategic position in the global economy. Our worldwide leadership in innovation. We have the most productive workforce in the world. And then if we were here a decade ago, we would have talked about a vulnerability in energy. Now, as the world's #1 producer of oil and gas, we actually have a competitive strength in energy as manufacturers enjoy cheap energy here in the U.S. I want to start with you, Tom, and the question I have is this opportunity to invest in the U.S. and all the good investment we've seen in the U.S., is it largely driven by being the bright spot in the global economy, or is it more driven by these structural advantages that we enjoy in the competitive marketplace? You have a unique perspective, as I said earlier, representing 3 million businesses. So, Tom.
Well, Jeff, thank you for the comments and for bringing us together. But the answer to your question is yes. Clearly, we have some advantages, and clearly we are doing well because others who we hoped would be doing better are not. Now, let me just comment on that for a minute. You know, you look at Canada and Mexico, they're huge trading partners of ours, but Europe is our largest export location for many years. And if the European economy could take a jump up, perhaps when we finally get the Atlantic Trade Agreement together, then we'd be stronger and more people would be investing in Europe. As you mentioned, we have an extraordinary advantage we didn't have 10 years ago, or less than that, which is the availability of oil and gas, which puts us in a position compared with people in many of the countries around the world where we can have access to it at a much lower price. And so right now, today, you will find all around the United States companies from other places around the world looking for, should I set my business up here or there, because of the issue of energy, and in spite of all of our regulation, because it in many places is less difficult than it is around the world. Two last sentences. You don't just look at the countries. You look at, in our instance, the states. There are some states that if you want to come and do business, you want to go there, you don't want to go to the other states because of regulation, access to quality, supply chain management, and transportation. I think the final point that I would make is America has got to sort of sit up straight and look in the mirror and understand that we're in a very good place today, and we hope you'll all bring your money here. But if we're not careful about the massive expansion that we are putting in place in regulation, and a good deal of that, by the way, on the environmental side, beyond what we have traditionally thought was necessary, we could slow this train down a great deal, and that would be a mistake.
Okay. Thank you, Tom. I'm going to come back to you on regulation in a few minutes. With the acquisition a year or so ago of Beam, you moved your market share from 1% in the U.S. to 11% in the spirits business. I think it's fair to say there's no more American brand than Jim Beam. And maybe you can give your perspective on managing, as a Japanese company, an iconic brand in the U.S.
Good morning. Thank you, Jeff. I'm pleased to be here. Let me talk about the Suntory a little, because some of you may not know us so well. Last April, Suntory Group acquired Beam by spending $16 billion. Now, with Beam Suntory, we are the third largest spirits company in the world. As a whole, Suntory Group is a unique CPG player. Spirits is strong, but we also have food and beverage units, 60% of our revenue. We also have a growing health unit along with beer and wine. With Beam Suntory, we merged our legacy of distilling with Beam's and placed our legend, Suntory whiskey, Yamazaki and Hibiki, under American management. It is very rare that a Japanese company takes its core and gives it to American management. We are different. We believe to be global means not to Japanize. We made U.S. our core, our control tower for spirits. For us, it was not a matter of choosing between the U.S., Europe, and anywhere in the world. We bet on the U.S. market because of its structural advantages. We believe the U.S. economy is the most resilient in the world. It always bounces back after big slumps like 2008 financial crisis and the internet bubble burst. Three reasons why the U.S. market always recovers. One, the main driver is definitely innovation, driven by diversity, diverse people, diverse cultures, and diverse thinking. Two, the U.S. government's commitment to ensure its economy is open to business, open to global trade, and open to investment. Three, the U.S. has a strong and stable capital market with sophisticated market mechanisms. The U.S. has a wide variety of investors who inject money to support innovation. It is easier to acquire and divest brands based on market mechanism. So I strongly believe that we can create the most competitive version of our business here in the U.S. to prove ourselves as a world-class player.
Thank you. David, spoke about resiliency. In 2012, your co-founder and chief investment officer, Bill Conway, wrote in the Wall Street Journal, "Nowhere on the globe can my firm invest in companies with as much confidence as we do in the U.S." That was 3 years ago. Our economy's changed a lot. Our stock market has gone up a lot, and the world has changed. How do you feel today, 3 years later, as a firm?
Before I answer that, could I just ask, how many people here are from the United States? I'm just curious. How many are from outside the United States? How many have been in a room this big before? Okay. I have to be very honest. I probably shouldn't have been put on this panel. Let me explain the reason. I really don't want people to invest more in the United States because I am looking for less competition. My job is to invest private equity dollars to get the best rate of return for our investors. We've invested $65 billion over the 25 years or so in the United States and a very large sum outside the United States. I prefer that people not invest to compete with me. So please, all of you who are considering investing in the United States, don't do so. And because I don't want competition. The reason I don't want competition is because I love investing in the United States more than any other place in the world. It's got these structural advantages. It's I would say the best rule of law, the best transparency, the best quality of managers, the best quality of exit opportunities, the best financing, and I'd say the most stable government in terms of reliability and in terms of regulatory environment, despite some of the regulatory issues that Tom and others have addressed. There's nothing comparable in the world to the United States. If I didn't believe in the diversification principle, I wouldn't invest anywhere else. But I do think for diversification, you should invest in other places, and there are great places to invest in the world, and there are good rates of return. But nothing is comparable to the United States, particularly now. Since that article was written 3 years ago, the United States has strengthened its GDP growth, its unemployment has gone down. I'd say its currency, while it has gone up against the euro and other currencies, is stable. Inflation rate is very low. And interest rates, while they may come up a little bit, are still very, very low. So when you're looking at where you want to put your money in the world, there's nothing comparable to the United States. Now, I wish people wouldn't believe what I say, and I hope all of you don't listen to me and invest somewhere else, because the less competition I have, the lower prices I can pay and the higher rate of return. But if you're not worried about my particular situation, I don't really think there's anything comparable to the United States, but there are other great places to invest, and we invest in about 50 countries a year around the world. All have their pluses and minuses. But if you had to invest in only one place in the world, and that was your last dollar or your last euro or your last yen or RMB to invest, there's nothing, in my view, comparable to the United States for all the reasons I mentioned.
Thank you, David. He started a little bit dicey, but he ended strong. Thank you, David. Fred, you do business in 40 different countries. Across the last few years, you've added 6 sites in the U.S. What's driving it? Is it limited opportunities elsewhere, or is it favorable conditions in the U.S.? How do you think that through?
Well, thank you, Jeff. Just a few words to put into perspective what we are. We are an aviation business, most famous for commercial aircraft. So in this country, if you fly American Eagle or United Express or Delta Connection, there's a high likelihood that you'll be flying one of our airplanes. But we are also in business jets and in defense. We are producing a light attack aircraft right here in the United States for the U.S. Air Force, which are going to be delivered to Afghanistan in their efforts to combat the terrorism there. We have been investing in the U.S. for 35 years. So all of our investment was organic. And the reasons are not a conjunction of situations. They are structural. In the U.S., there is, of course, an important market. So being closer to our customers is a very important issue for us. But also the stability of the institutions and the rule of law, which has been just mentioned here, is very important. It's very important for any business, and that we have here. Our business is a long cycles. Development cycles typically are 7 years, production cycles 20, 25 years, sometimes more, and after sales support cycles, they can go to 30 years and sometimes even more. So stability of rules and rule of law is very important for us. Also, access to talent. access to skilled labor. In our latest investment in the state of Florida, we are in the Space Coast, and as the shuttle program was being discontinued, so we had an excellent access to labor, to skilled labor, from janitors, frankly, all the way to scientists. So this is also a structural strength of the United States. And last but not least, the insertion in the global supply chains. The aviation business is intrinsically global, and in this country also it's a good place to be as far as being part of a global supply chain. So all the reasons are structural.
Thank you. I want to get a little more granular on how a company, a CEO working with his or her board, thinks through whether to invest in the U.S. or a competitive market. We all who are in business or work as part of government supporting business know how intensely competitive the global marketplace is across all industries. And this is true, too, for competing for foreign investment. The U.S. is not alone in wanting more foreign investment. Let me go to you, David. You've got 200 companies. Let's not focus on the 80 that Carlyle owns in the U.S. Instead, let's focus on the 120 that are headquartered outside the U.S. If you go inside one of those boardrooms and they're thinking about a big investment in another country, and the U.S. is a possibility, how do they think through that investment decision?
Well, I would just preface it again by saying that in the companies we own in the emerging markets are considerable, and we are one of the larger private equity investors in the emerging markets. The emerging markets have wonderful attributes to them, but unlike the United States, you have to focus much more on the accounting, the quality of the managers. The Foreign Corrupt Practices Act is a major consideration in many of these countries, and these factors are not such a big problem in the United States. The quality of the workforce, the quality of management, the accounting, transparency, and corruption issues are just not as big an issue in the United States. But if you're in an emerging market and you're considering investing in the United States, or in Europe and you're considering investing in the United States, the considerations that you're taking into account are whether you really have a market there, whether you can export your products. And I'd say generally we think that the U.S. is receptive to people exporting products here. There are regulatory issues that always have to be dealt with, but there's no doubt that most countries in the world want to export their products to the United States. It's the deepest market per capita of the large economies in the world, the highest per capita of the large economies in the world, and it's got the deepest ability to buy products from all over the world. And so when we're in a country, let's say we're in a company it's in Brazil or in Mexico or in China, when we're looking at exporting to the United States, we don't have the same considerations that we have to do if we're investing, if we're going to export to another emerging market. We recognize that the rule of law will be there. There won't be corruption factors. The principal issue of late has been currency. There's no doubt that the currency, as it's moved against the other currencies, has been a difficult thing for some exporters. The dollar has appreciated against the euro 27% since last year, maybe 15% this year. That is a factor. There's no doubt that currency will move some people to not invest in the United States or not to export to the United States. But overall, if you're looking from a 5-year, 10-year perspective, which mostly organizations like ours are taking into account, the U.S. still probably has a better opportunity for people to export and to manufacture here as well. And I should say that many of our companies now who are in the emerging markets are looking at in manufacturing things in the United States, which before they wouldn't do. That's in part because of the factors I mentioned. The currency has slowed it down a little bit, but it's just slowing it down. I do think that you're going to see more and more companies that are based outside the United States beginning to manufacture or produce services in the United States for the United States market, and also for their own home market in some cases, or for other markets. It's for all the reasons I mentioned. I don't think the United States has a competitor in overall a global economy as a place to locate a facility and ultimately to build production facilities and to export.
Secretary Pritzker talked about the U.S. has regained its lead as the #1 place to invest in the world. We had lost that for a decade or so. Clearly, given the intense competition I talked about a minute or two ago, we can't stand still. The President has talked about significant priorities working with Congress on trade agreements, on business tax reform, on infrastructure. I want to turn to the panelists to get their counsel on what matters most going forward in terms of legislation or other actions in order to move the dial so that we maintain this lead as the #1 place. I'm going to turn to you, Tom. The Chamber has talked about and actually released a report about the importance of infrastructure and the strong relationship between infrastructure across the world and foreign direct investment in specific countries. At the same time, as you said earlier, you're a strong advocate for trade agreements, the Trans-Pacific Partnership, and Europe being teed up at this point or far along. How do you think through, Tom, the most important priorities with this foreign direct investment lens on to ensure that we maintain our lead as the #1 place to invest?
Well, Jeff, when you ask the question of, and you made the list you talked about, when you ask a question of what's most important, you have to immediately separate it into two piles. One, what can really be achieved? It may not be the 5 most important things, but if it's in the other pile and it's not going to get done because of, you can name it, political issues, election issues, and so on, then I'm going to leave that in that pile and go back to the things that we can get done. There are 2 or 3 things I'm fundamentally convinced that we can get done. We have an agreement or a similar objective with the White House and some challenges in both parties on the Hill, but I believe we can get the trade agreements done. You know, we've quietly gotten an agreement, as you know, from the WTO, which sort of saved their bacon too, on trade facilitation, and we don't need to vote it, and it just helps everybody make more money moving goods and information and products around the world. And we're going to get a technology agreement as well. But the 3 agreements on the table that we have to work on and that all of you should be interested in are, of course, you know, the Trade Promotion Authority. You don't, people from all over the world, all that means is there's an arrangement between the White House that's out negotiating the deal and the Congress that we're not going to let 435 members of the House and 100 members of the Senate rewrite the bill. I mean, keep them posted all the way along, and then they get to vote yes or no. Following that, and by the way, that will get done. It's ugly. It won't get done with a lot of votes, but nobody cares. You need to win by 2 votes. 1 vote to win and 1 in case somebody dies of a heart attack on the way to the vote. So then you'll be all right. The next thing on the agenda is the Pacific Agreement, which we're very, very close to. Some of us in the business community are cautioning, don't make it too light an agreement. I mean, if we're going to spend all the energy and have to work hard to get the votes, then make sure it's an agreement that's really going to facilitate trade and development and investment. And I think we're getting close there. The one that has a new urgency is the Atlantic Agreement. And just like in every trade agreement, you know, whenever economies are under stress, people all over the world, including right here in the United States, you know, they retreat to being protectionist. And we got to get over that deal because whenever an economy is under stress, we want to grow it. And so the Atlantic Agreement is very, very, very difficult and very, very important. And, you know, when you look at the EU, what does Kissinger used to say, when you call Europe, who do you call? And, but we'll get that worked. We get the momentum. We'll do, you know, trade promotion. We'll do the Pacific deal. And with that momentum, hopefully before this administration goes off to the sunset, we'll get the Atlantic Agreement as well. And if we do that, we will not only increase our own economic growth, our own economic stability, but the same thing with people all over this room.
David?
Jeff, I would say that many people who are not from the United States will often say, well, your country's government is dysfunctional. And it doesn't seem to operate the way our founding fathers intended it. Well, actually, the founding fathers probably were not completely dissatisfied with some things not getting done quickly. And in fact, in the early days of our country, the executive branch and the Congress were in worse shape than they are today. Will Rogers, a humorist in the 1930s in the United States, once said, "Our country's never safe as long as Congress is in session." And that may not be completely fair, but there's no doubt that the dysfunction of the executive branch and the legislative branch in the last couple of years has not hurt the economy. Maybe the economy is doing so well because Congress isn't doing very much, and maybe business leaders have concluded that Congress isn't doing anything damaging to the economy. But I do think, agreeing with Tom, that of all the things that can be done by the Congress of the United States to help our economy and to help the global economy over the next year and a half is the passage of these trade bills. I'm not confident that Congress can pass all three of them. That may be more than Congress can absorb. But I do think that at least one of them, probably the Pacific one, will get passed. And I don't think it will be easily passed. And as Tom said, you only need to pass them by 2 votes, not because somebody might die of a heart attack, but it's because you don't want any one member to be blamed for passing it. So you need an extra vote so that one member can't be blamed for having passed it, but for that person's vote, it wouldn't have passed. But I do think that this legislation, probably the Pacific one, will pass, and I think the administration deserves a lot of credit for trying to get it through. It's not easy to pass it, and particularly because in this case, the legislation will pass with a majority of Republican votes and a minority of Democratic votes, most likely, and that's always difficult for a Democratic administration to have to deal with that situation.
Quickly, you also mentioned infrastructure. That's the quickest way to up productivity, efficiency, and reduce frustration. All of those of us that we're trying to get here this morning understand that. The one thing we have to do with that is fix particularly the federal contribution to the Highway Trust Fund. We haven't increased it in 22 years. It's a political weakness on the part of both parties, a lack of courage to simply say, we're going to increase, with the price of fuel all the way down, we're going to put a small increase on the federal fuel tax, because that is then married with the state and local efforts, and they've kept their numbers up. And the argument that it's a tax, I always say it's not a tax, it's a user fee. If you want to use it, you pay it. If you don't want to use it, don't pay it. Doc?
Thank you, Jeff. Another aspect, we manufacture with the great brand, Jim Beam. We want to export from Kentucky, and we want to expand the production capacity, but we have assumption to have invested to Kentucky, Louisville, Kentucky, that this trade agreement, like TPP, will be materialized soon. Then we can export the Jim Beam to Japan. And from my positioning, I'm bridging between the two. I'm pressuring the current Japanese government toward the agreeing upon the TPP. And that's critical for us to expand our business to around the world. And plus, we can increase jobs in Kentucky, and we can expand the production. So this is critical for investment.
Fred, I want to come back to you, and I'm going to pick up on something, Tom, you mentioned earlier. This is not just about the U.S. writ large as a country, it's also state by state. And Fred, you've made investments in 4 different states, Arizona, Florida, Tennessee, and Kentucky, all across the last few years. As you think through those decisions as to which states to locate in, what's your advice to state representatives in the room as to how to make their state most attractive for foreign investment?
Oh, it's 5 states also, because we have acquired a small business in California of aero seats. Again, we go back to structural issues. So, having a good pool of qualified labor is very important. But of course, it is also important the ease of doing business, incentives within the framework of the legislation available. Of course, taxes are also relevant, and so we have heavily invested in Florida. It's been we are there for 35 years. But we in the attempt to globalize our company, we're not in the U.S., invest in the U.S. for the domestic market, not market access. We really intend to transform our operations in the U.S. as a global platform for exports. And for example, our executive jet business, we are gradually moving our center of gravity, if you will, of our business to the United States. And why is that? Because, you know, most of the supply chain, the largest portion of the market, and the culture of aviation is present here. So in that aspect, if I may add, you asked about points which could be improved. In the particular case of Brazil, there could have been more investments if there was a bilateral tax treaty in place. Brazil and the U.S. do not have a bilateral tax treaty, and this, of course, is a handicap for investment. A second point, which I would touch upon, is firms investing in the United States in a high-tech environment, which is our case. We have now 200 engineers working in our executive jet business in Melbourne, Florida. Access to R&D funds, access to the national labs, as if we were a U.S. corporation. So that would also be important, because in the end, innovation is here with U.S. citizens and is developed here. So those 2 points would be of particular interest as a suggestion.
Any other advice to states as to how to position themselves to be most competitive?
Be competitive. I mean, it's fascinating to watch states compete to get an investment, to have a company come and establish their own activities or a companion activity, or to make an acquisition and stay there, and they provide tax advantages, they provide education opportunities, they correct problems in their regulations to be more competitive. And you know, it's interesting to hear David talk about, don't come here because he doesn't want to have to compete with you. What the states in America are telling you, most of them, they're telling you, we're going to be competitive. We're not only going to be competitive with other places around the world, we're going to be competitive with the rest of the states. And this is what you find here in America is entrepreneurial activity in the states by government officials who are looking at their bottom line and trying to figure out how to create more jobs, more tax revenue, more improved quality of life, all of which is going to make them look like stronger executives and help them get reelected.
Right. There are 50 governors, 47 or so of whom think they should be president of the United States, and probably 43 of whom are probably running for president of the United States at any given time. And the best way that they can say that they deserve to be president is to show all the foreign direct investment or other investment they got into their state. So the best thing to do, in my view, if you're trying to get a good deal, is to play one off against the other. And do it as long as you can. Stretch it out for about a year or so, and you will find that these states will do things that you didn't think that they could legally do. But it's amazing the amount of things that governors will do in order to get foreign direct investment.
All right, David, I'm going to take you off of the states and actually bring you back 40 years or so. In that David, before he started Carlyle, worked in the White House, actually for President Carter from 1977 to 1981. So David, I want you to put that hat back on. You mentioned earlier about the priority of trade agreements. What else should the U.S. government be doing to make sure that we are the best place to invest and remain competitive?
Well, first, I should say that I did work in the White House for President Carter. I managed to get inflation to 19%. I haven't been invited back since. So there's no fear that I'm going back into government. Don't worry about it. Inflation will not be a big problem. And if there is a deflation problem in the United States, I'm the person that can solve it, and I've told people in the government. The principal concerns that foreign governments have, or foreign investors have, that could be addressed deal with the regulatory burden and the tax burden. I'll give you one example. In 1986, there was an article in the New York Times that said, more or less, that Japan was buying some farmland in Nebraska. And as a result, people thought that our food supply would be controlled by people from outside the United States. So the Congress, in its wisdom, passed a tax that said, in effect, that there is a special tax on people that invest in real estate in the United States, so-called FERPTA tax. And it's been stretched to a large group of different things that really weren't intended originally. But it really is a disincentive for some people to invest in the United States in certain real estate and energy-related facilities. I think what doesn't pick up that much revenue, it mostly helps lawyers structure around it. I do think it would be a good idea if that could be ameliorated, if not eliminated. I also think that the regulatory burden could be reduced for those who want to come to the United States, particularly getting employees to work here. Things that could be done to improve the ability of foreign companies to bring their employees over here, and for immigration and visa-related things would help a great deal as well.
I think this is not related to the government business, but we have two challenges since we came here in States. The first one is high turnover of talented people in the U.S. That creates discontinuity in the organization, because we believe we should share core values amongst all Suntree Group companies, and how we can keep instilling. But people, we see the high turnover of people. I think that's a challenge for us. And another challenge is legal climate. It's very complicated for foreign companies to be here. And you have lots of regulations and bills, more than can fit in a phone book. And it's very complicated. It must be a good system, but for us, it's really difficult to deal with. And we need good advisors who have the know-how of the cross-border experiences and practices. So lawsuits scare us, such as antitrust law, such as class action, such as securities shareholder law. Very, very complicated. So that scares us. Though we are here. Now we have good advisors, but that must be the addressed.
Right. We need to talk.
So you give your employees more free samples of your products, you could hold them on longer, probably.
In fact, do you know, seriously, do you have some indications of why you have a high turnover? And what level of employee is the turnover so high?
Rank and file and the middle management.
Mm-hmm. Are they going off to, after you've trained them, to better jobs, or?
Yeah, that's what we are working to train them. But high turnover means we may lose those people.
Yeah, that's interesting.
For a final 10 minutes or so, I want to really open it up. So, general advice. All of you are very experienced, astute leaders and investors. If you're out to a cup of coffee or a whiskey with an investor, what would you tell him or her about how to best think through investing in the U.S.? Tom, why don't I start with you?
Well, over a quick drink, I would hope that I'm speaking to an experienced investor, because if you're a novice at this, my advice is start slow, get a really serious advisor that's going to help you pick the right deal, and listen to all the points you've heard about the great strengths but the complexities of doing business here. But to a relatively sophisticated investor, I mean, I think there are three things. Don't get very far from your core just because things sound great. B, don't overpay, because as David will tell you, in the private equity market and in companies, established companies, there's a lot of cash laying around right now, and there's a lot of pressure to find product. And if you're the new guy coming from somewhere else, you might pay more than you might want to. And the reason I caution against that is there are these expenses that you've yet to see. And the final thing is, I would say to your management or to your capital sources, don't overpromise. Better to underpromise, overperform. Better to stay with your core. Better to underpay and over-return. All of that's a great idea. It's hard to do, and it's particularly hard to do in a market where there's unbelievable amounts of cash. And David, would you correct me seriously and add to that anything that you would?
Well, there's no doubt that foreign investors sometimes come into the U.S., as they do in other markets, at the wrong time. Sometimes when markets are going this way, people think they need to jump in and because they're going to miss something. Obviously, the best time to invest is when prices are going this way. Now, prices are high in the United States now in relative terms. However, I think that people should look at investments in the United States or elsewhere over a 5 to 10 year period of time at a minimum. If you think you're going to get in and out of a market in a year or so, you're probably going to wind up coming in at the wrong time, and you're probably going to make a mistake. You have to look at enduring longer-term investments. We have a short-term mindset in our country now and around the world. Everybody worries about every day and every quarter. You have to take a much longer perspective. And if you take a longer perspective, I do think that the United States is an attractive place because in the long term, the economy is going to be growing at a pretty good rate. We're going to have a very well-educated workforce. We're going to have, in the end, regulations that are not as bad or onerous as they are in other countries. And if you just look at 5, 10, or 15 years out, which currency would you like to be in? Which employees would you like to have working for you? And I think the United States trumps every other country. There are other great countries to invest in, but the United States, if you had to pick one place to invest, I think would be the safest place to invest over a 5 or 10 year period of time. But you've got to be very careful and recognize it's not a transitory type investment. You're going to have to do it over a longer period of time and plan well for it. And don't expect profits are going to come about overnight or very, very quickly. If you do, you're going to be very disappointed.
Very good.
Fred, you've been on the ground operating here. What are the best practices? What would you provide as lessons learned, if you will, on not only investing here but being so successful in your investments?
I very much follow his words. You have to think long term. You have to respect the culture, and more even so, to benefit from all the strengths that we have. We have, for the last 4 years, been gratefully elected one of the best companies to work for in Florida, large companies. And so you have to think long term, you have to invest long term, even being a corporation, which we are, and probably 60 to 65% of our shareholders are U.S. funds. More than half of our shares float here in the New York Stock Exchange. So every quarter you have those earning calls and all those demands for results, but stability long term is the name of the game. If you manage your company thinking globally, I mean, our experience is that the U.S. talent, the U.S. management, your people, they really stick to those values, to those ideals, and in our particular case, we have a very, very small turnover. So we're very happy about that. In all states, in Florida in particular, we are where we have the largest operation.
Hock, do you have thoughts here for fellow CEOs and lessons learned after a year or two of a major acquisition?
Well, this is a simple lesson I've got, that this is the most serious. But the cultural differences, that is now a big challenge for us. Since we acquired the Beam. There is U.S. communication is more clarity. Japanese is Japanese people try to avoid the confrontation. So that goes wider and wider in terms of misunderstandings. And if it runs wild, the unity between the two will be in danger. So I thought it will be a big issue, but it's more than that, I'd imagine. So now we are now implementing two things. One, I started global communication matrix, which means each layer communicates with each other, especially top management. Me always talking to US CEO and rank and file as well. So one, communication horizontally. Two, we started to exchange a senior level of people between the two firms, companies. We just sent one senior staff to CEO in US. That helps him understand Japan business. Whereas soon we will have the senior executive from US side to take a very important position in Japan. These kind of implementation takes time to see efficacy, but everybody says there exists a cultural difference, but we have to be prepared for taking a lot of time to tackle the issue. And well, you may know, do you remember for relaxing times, make it Santry time. This is a movie from Lost in Translation. That is kind of happening. So we have to well prepare for the investment in terms of cross-border, like Asian country and the US. I think that's a big challenge we are facing now.
Great. I'm going to close with offering each panelist a minute or two to give their closing thoughts, advice, or closing argument. And I'll start at your end, David. As a trained lawyer, what's your closing argument here?
Well, again, I hope you've concluded that you shouldn't invest in the United States and leave it all for the private equity investors to buy at reasonable prices. My company invests all over the world all the time, and we see the pluses and minuses of various markets, and there's no doubt that there are pluses and minuses of different markets. The United States is obviously not filled with only pluses. We have our negatives as well. I do think that over the next 5 to 10 years, and maybe longer, the United States is likely to increase its GDP by a greater amount than any other of the developed economies. The emerging market economies will probably grow at higher rates, but they have more complications as a place to invest. And overall, even though we're a very large investor in the emerging markets, the truth is the statistics show that the rate of return in emerging markets over the last 5 and 10 years is not any higher than the rate of return in the developed markets. That being the case, you would say, why would you invest in the emerging markets given the greater issues, corruption issues, lack of financing, often the inability to get control of things? It's because of a diversification principle. And there's no doubt that the emerging markets will continue to grow. Today, the United States in 1960 was 46% of the world's entire GDP, almost half the GDP in the world with the United States. Now we're about 18 or 19%, and it's going down. So as the emerging markets, which have 85% of the world's population and 55% of the world's GDP, grow, it will be attractive to invest in emerging markets, even if the rate of return isn't going to be much higher than the United States. Still, if everything is down to whether you can invest in the emerging markets or the United States, I've given that choice. I would invest in the United States because of the factors I've tried to elaborate earlier. I do think the United States will have its challenges, but I think that very, very few foreign investors who come into the United States ultimately say, I have to get out of the United States, it doesn't work for me, the employees aren't very good, the education isn't very good for our employees' families, the regulations are too complicated. There are challenges like everything in life, but in the end, I think very, very few people who come to the United States to invest or build facilities are disappointed after 5 or 10 years of being here. If anything, they are building more and now exporting from the United States very often to their own countries.
Fred, final thoughts?
A couple of thoughts. First, as an advice for someone willing to invest in the United States, think of coming here and staying as a corporate citizen, not as an opportunistic, approach, but as a long-term investor. You have to stay here, have to hire local people, try to avoid, moving your management over here. Use local management; they're very capable of, and if you share the values and the visions, they will follow and be aggregated to your goals. And one second and last thought about specifically about the continent of ours, America. I would love to see a closer links between the United States and South America, in particular my country, Brazil. We have a lot in common. Both colonies of European countries. We are both about 500 years of age. Majority of the population share the same, even religious beliefs, and same time zone approximately. And a lot can be done if there is a political willingness to get those two continents together. Thank you.
Talk.
Thank you. We want to be competitive in the global economy, right? So definitely we want to be growing, and we grow from innovation. Which country is the most innovation power? That's the U.S., definitely. So we got to be here. We have to be growing by innovation. So we got to be here, and it's crystal clear. That's why we are here. That's my message.
And by the way, there are a lot of private equity firms here that if you do make an acquisition here and you don't like it, we're happy to buy it from you at a lower price than you paid.
At a reasonable price.
Yes, that's right. We have to negotiate 10 years from now.
All right, Tom Donahue, in classic Donahue fashion, give us the bottom line.
Well, the bottom line is you're all here because you're thinking about investments. They won't all be in the United States. But if you are concerned about the total investments of your enterprise, a good portion of them will be here for 3 or 4 reasons we haven't discussed. If you look around the world today, there are more political, financial, conflicting hotspots than we have seen in most of modern history. And then, of course, when you've looked what's happened to economies around the world, there are more places that we're worried about the stability of the capital markets. So if you were to come to the United States and make investments here, you will be not only benefiting from the people that are creative, you'll not only be benefiting from the rule of law, you'll not only be benefiting from strong capital markets, but you'll be taking your investment to a safe place with stable government, with strong protections in the capital markets, and with a great opportunity to follow what David said in the beginning: go where it's safe, don't go where it sounds tremendous, but where you know that it's going to be stable, the return's going to be there, people are going to treat you fairly, and you have a fair chance in a very, very competitive world to prosper. Don't lose sight of the environment in which we sit. If I were where you are, I'd be putting a bunch of my money where I am.
And don't assume if you invest here, as Tom and I would show, your hair will turn gray. It's not necessarily the case that will happen if you're a strong U.S. supporter.
Well, perhaps. Depends on the investment.
Okay. Yeah, I feel like I'm in a bit of a transition stage here. I want to thank Fred, Tom, Tak, and David. I know personally I've learned a ton that I'm going to take back to the White House, and I'm sure I'm speaking for everybody in the room. Thank you. This was stellar and much appreciated.